Hello guys, welcome to a new video, and as you can see from the title, we are gonna see how you can execute an option trade with only $100. So if you don't want to put too much money in the line and you want to just start small, then this would be the perfect one to do so. And I'm gonna discuss stepwise where to find the stocks and how you can execute this strategy and what to do if something goes wrong. So if you are interested in all that, then please do stick around, and with that, let's start. Okay guys, so I'm in my Robinhood account, and the first part we are gonna see how you can get good stocks in your budget, right? So if because we are going to do $100 one, so our kind of budget is limited, so I'm gonna first show you how you can select or find that stocks which are in that kind of a range, right? And they are also a good stock. So I'm gonna use Robinhood for that, and this is the custom screener that Robinhood provides, right? So if you are not familiar about how to actually set this up in your own account, then I have a separate video which I'll put link somewhere here. You can go and check that out. That will give you a full detail on how you can actually set this custom screener. There are some screeners which are provided by default. I'm just gonna use one of that, but I'll use some of the tweaks that I'm going to show you right now. So this is the highest volume screener that is provided by Robinhood out of the box, you can say, but there are some tweaks that I'm gonna show you right now on how you can actually make it so that it's easy for you to find out the stocks that you want, right? So I will put my range, right? So basically this provides the highest options volume, which is good because we want stocks which are kind of trading more hands. So that's why we want to see stocks which are more in volume, because that provides the liquidity. It helps you close or open the positions very easily. So that's the first thing, and which is good. We don't have to change that. And the second thing that I think I already did on this, so what you can do is you edit filter here, and then you come down, and the first thing that you want to do is the market cap, right? So stay away from small cap for sure, and if possible stay away from the mid cap as well. Just go with the large cap or mega cap. I'm not doing right now because mega cap the prices of the stock, right, per stock would be higher. So kind of sweet spot is a large cap, so that's what I've selected here. And the second thing is the share price, right? So I'm just gonna keep it under 50. So that's that, and that gives you these list, right? So I'm just gonna pick out of these. Let's say I know Robinhood and I've been trading in their platform, and I'm kind of little bit know on the financial side of it as well. So pick something that you know, right? So I'm just gonna show you this with Robinhood, but the same strategy applies to any other stock. If you are familiar, this is a very quick way to find out the stock. So these are kind of the stocks which are like Intel also would be one of the good one, right? Bank of America, Snap. So they are having a good volume, plus they are large cap, and they have the price range that what we want, right? So I'm going to pick Hood in this. So in the second part, we're gonna see how actually you can set up your trade. Okay, so part 2, right? In this one I'll show you how you can set this up trade with only $100, right? You can start with that. So the first step would be you do sell put here, and then let's go a week, right? Because that's kind of the highest theta that's gonna give you more than like around a week is where the theta goes really high, and that's what we want as a option seller, right? So that's that. And I'm going to pick you can pick either 19, or I have seen this Hood is recently, it's kind of broken from a long range of up and down. So I feel that 20 is gonna be a new support, but we'll see. Right now I think I saw today the RSI was a little high, so it's just cooling down right now. We can, let's say for our example, we select a sell put as this, right? And then we are gonna, so this is, if you just leave at that, you're gonna receive $94 credit, and that you are basically putting $2,000 at risk, right? So this is the usual cash secured put, and this is pretty straightforward strategy, right? But the problem with this is you have to have $2,000, right, on this. And what we're gonna see today is that you only have $100 to play with, or you want to just start and you do not want to put too much money into risk, right? So for that, what you can do is just right below you do buy a put, right, at 19. So you buy the put, and now if you see here, right, this is gonna be your new graph. We are gonna collect almost $50, and your max loss is only 48, right? So this is awesome, right, guys? So look at the chart here. So you are basically collecting the whole $50 if Robinhood stays above 20, right? But there is a break even as well, right? So your break even is pretty low. You're gonna make money as long as Robinhood stays above this 19.47 dollar range, right? That's your break-even price. So now in the final part, I'm gonna discuss what are the scenarios that can happen and what to do if it really does not go in your favor, right? So because that's very important when you get into any trade. So we're gonna discuss that in the last part. By the way, guys, if you like this video so far, then please do give a thumbs up and subscribe to my channel. I make a lot of videos around options, and I'm sure you're gonna get a value out of it. So do subscribe, guys. Okay, so there are three things that can happen, right? The first is everything is good, Robinhood really stays above 20, and that's the happy case scenario, right? So that's here. If Robinhood closes above 20, and that's your happy case, and there's nothing you have to do. You just let the time pass and let the time do its work. You're gonna collect this $50, and you basically made 50% on your money in just about 8 to 9 days, right? That's a very good case. So as long as Robinhood stays above 20. Now let's the second case, right? Let's say it starts going down. Okay, so I would say this is the range, this is the path, like from 20 to your break even. Between this is where you have to actually decide what you want to do. Okay, so let's say next week, right, Hood still kind of hovers around this 19.8 or it's 19.76 kind of a range, right? You are still making money, you are still making $27, right, on this, which is almost 50% of your total profit. So if you see that it's going down, market sentiments are changing, this would be a good time to close out from your trade. You can just simply close and come out of the trade. You don't have to do anything. You make $27 and you have your capital back $100, right? So you can play your next trade. So this would be a good point to close if you think that the market is kind of coming down. Now the final case, right, let's say if it really goes down, if it really goes against you, and if it's kind of in this kind of a range, right, where it has gone almost to 19, and there's like a really no hope for you to kind of if you think that this is not gonna come back, that's the only case I would say you will have to take loss in this. Because if you think that all the technical signals, all the market signals are going against you, then you have to take a loss on this. But if you have a slight chance that this might go up again in the next week, which is kind of the market right now, it's kind of in a bullish trend, so this is the spot where I would say you roll it out. Okay, because on options there's always, you can roll it out to future expiry date, right? So this is the place where you should do it. For that I have a separate video on how you can actually roll it out. I'm not gonna go too detailed, but that's the option that you should exercise if the stock is hovering around here. So in that case, the two ways you can roll it out quickly to cover that. You can close out on this, and then what you can do is you just, let's say, close out this position completely, and then you just do sell put, but you go one more week in advance and you roll it down, right? You start from 20 and then you do that again, right? You do that, but you are basically went down and you collected some amount here, right? So you don't have to take the full loss. You can close it for some loss, but then you can make it back using a credit spread again for the next week, right? If 1 week doesn't suffice, you can always go 2 weeks, 3 weeks as well if you want to increase this credited amount. So you really don't have to take the full loss. There's always a way to move out your expiry and move out in a way that you still get credited, right? That's always an option. Okay guys, so those were the 3 things that can only happen. There's no other way that this trade can go, and that should cover you for this complete trade. So I hope you liked it, and this, as I said, it only requires $100 and it's a very small account strategy hack that you can do. And if you have any questions related to this, please put your question down in the comment. I do reply to all of them. And as I said guys, if you like this video, please give a thumbs up and subscribe to the channel. That helps me make more such videos. I'll talk to you in my next video guys. Happy investing. Bye bye.